Good morning. Welcome to Stock Market Today. It's Thursday, July 2nd, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. And just a quick programming note, there will not be a show tomorrow as markets are closed in observance of the Independence Day holiday here in the U.S. on Saturday. So U.S. equities were mostly higher in Wednesday's trading. S&P 500 higher for a third consecutive day, and the NASDAQ finished the day at new all-time highs. REITs and utilities outperformed while energy and financials lagged the broader tape. Treasuries were little changed to weaker with the curve steepening. The dollar was down on the major crosses. Gold was up 1.1%. WTI crude finished higher by 1.5% as upbeat news on potential for a COVID-19 vaccine, along with positive economic data in the U.S. offsets continuing concerns about rising COVID case counts in some states. As we get to the desk this morning, it is Jobs Day here in the U.S. The June unemployment report, or the non-farm payroll report, due out at 8:30. Futures are up 50 basis points. European markets are higher on the heels of strength in Asia overnight. Treasuries a little changed. The dollar is weaker against the euro and sterling. Little changed on the yen cross. Gold is up 30 basis points. And WTI crude is up 60 basis points. And I apologize, gold finished down yesterday by 1.1%, not up. Let's take a look at the structure here. Stocks rally in front of the June jobs report. That 3,000 mark for the S&P 500 continues to be solid support. All right, so that zone is still in place, 3,000 to 3,100, 2850 to 2950 below that. February highs are still in play as support holds. Resistance 3150 to 3250, and we'll see what Jobs Day brings us today in terms of these support and resistance levels if they do come into play. So the structure of the market here remains largely intact with solid resistance at 3150, solid support at 3,000, with the rising 50-day moving average now coming into play to join round number support, as well as the 200-day moving average. The 13-period CCI is leaving oversold conditions, and Shaken money flow is bullish but waning. So the structure remains largely intact in front of an important catalyst at 8:30 this morning. Let's take a look at our market in a minute now. What are we writing about in the note today? Well, we touched on this a little bit. The NASDAQ hits a new closing high. Breadth metrics improve but remain mixed. We're looking at mid-cap growth in our note as part of our ongoing favorable theme towards growth. Mobile payments as a bullish theme as well. I have a highlight that in my note today. And then futures point to a higher open with the June jobs report on deck, as I said. Taking a look at the major indices now from a power bar perspective, the Dow lost 20 basis points yesterday, 2 bulls to 8 bears there. S&P 500 tax on 70 bips, 90 to 117 bulls to bears there. NASDAQ outperformed, again, new closing high for the Qs, 36 to 11 bulls to bears on the NASDAQ. Small caps down by nearly 1%, 558 to 293, shift in the ratio there. Bonds downticked, sending yields higher. Real estate and utilities, your two leading sectors yesterday. REITs add 2 3/4%, 2 bulls to 13 bears there. But even with the rally in the NASDAQ and the S&P 500 yesterday, the day certainly had a defensive feel to it. According to the Shaken Power Bar, small cap stocks are more bullish than large cap stocks, and the major indexes across the board are mixed. Now, going with our theme of presenting screens on Thursdays, we just came to the end of the second quarter, and we are less than 2 weeks away from the start of earnings season here in the U.S. And obviously, we remain favorable towards the growth theme. So I ran a screen today of the growth stocks within Shaken Analytics that have a power gauge rating of neutral or better. And then drilling in on our factors, I wanted to see the stocks that have a bullish earnings surprise factor as well as a bullish earnings trend factor. And I wanted to overlay that with the stocks having strong money flow and strong relative strength. So 35 names past that screen, some high profile names on there such as EA and Take-Two and Microsoft. Apple on that list as well. This is just a screen that I wanted to put together to help create watch lists as we get into earnings season for names that could potentially be interesting. Take a look at Netflix on that list, right? Traded at a new high yesterday. Atlassian, TEAM, is a stock that's been doing well of late. So take a screenshot here, utilize it to build a watch list, right? It's not saying immediately go out and buy all these stocks. You know, these are names that look compelling as we head into earnings season with the potential to be added to a bullish side of a portfolio should, you know, your specific criteria be met. So I wanted to be helpful here putting together a screen. Let's take a look at the sector tracker now. The movement of the major sectors over the last 5 days. Real estate jumps to the top of the list, having a strong showing of late. Materials and healthcare round out the top three, right? A lot more green on this screen after the, you know, a 3 days of rallying for the S&P 500. We have industrials, tech, and utilities in the middle of the road. Discretionary staples and comms are lagging, but still higher. Financials and energy, right? Those are your value plays, right? Your cyclical / value plays towards the bottom of the list as that growth over value theme continues to play out. You know, that's a theme on which we've been bullish. We've pounded the table on it for well over a year at this point. And the trend is still very much intact in terms of what does that mean? If you're just looking for individual ideas, I think it means that all else being equal, you want to skew towards where the relative strength is, right? And right now, relative strength is in the growth areas of the market. That has been the case, and that continues to be the case. And the weight of the evidence supports that continuing to be the case. So that's our view. We're sticking to it. Our industry in focus, capital market services, which over the past 6 months has slightly lagged the S&P 500, lagging the broader index by about 1.2%. However, its power bar ratio, which measures future potential, is very strong. 18 bulls to 4 bears there. It's currently ranked number 4 of 21 subsectors, having moved up 2 slots over the past week. So some of the names there that might be somewhat interesting, Donnelley Financial, DFIN, with a very bullish rating. International FC Stone, INTL, very bullish rating. And Evercore, EVR, also with a very bullish rating here at Chaikin Analytics. And as we look at the structure of the fund here, it's fairly interesting to me, actually. I think if you were looking for opportunities in the financial space, this would be one of the areas where I'd be looking, as opposed to, say, the banks. Bullish ETF power gauge rating for a strong trend, right? The fund is above this rising long-term trend line. Persistently bullish money flow for the past few months, slightly outperforming, right? So bullish stock slightly outperforming with bullish money flow, not stock rather, but an ETF. Overbought, oversold indicator beginning to move higher in an oversold position as this stock finds support, or the fund finds support at that rising long-term trend line. So I think, you know, if you are looking for opportunities in the space, as I said, this would be one of the areas where I think it makes sense to be focusing attention, right? So take a look at KCE, drill down on those components. There are 18 bullish stocks in there that might be worth a look on the long side of the portfolio. As we take a look at what's trending now, right? Yesterday's S&P 500 gainers and losers are movers and shakers. FedEx earnings sent that stock higher by about 11.75%. Amgen had a favorable patent ruling. Investors like what they heard there. Bullish stock up 8% on the day. Netflix, I didn't see much in the way of company-specific news, up 6.6% for this bullish stock that did trade at new highs yesterday. STZ, Constellation Brands, up 6.25% on the heels of their earnings announcement. And a cardiac study helped Abiomed, ABMD, rally by 5.6% on the day. The loser side of the board, LNC, didn't see anything company specific to take 5.75 out of that stock yesterday. Comerica, same story, down a little over 5.5%. Nothing company specific there. FANG, Diamondback Energy, removed from the A1 list at Bank of America. That stock down 5.3%. Xilinx, the semis were weak yesterday. Xilinx had a big day the previous day. Looked like they were giving back some of that strength. Xilinx, a neutral stock, down 5.2% yesterday. And AIG, Sell-side analysts cut their numbers for 2020 and 2021, and investors took 5% out of that neutrally rated stock on the day. So let's dive in. We take a look at breadth on Thursdays here in our note, try to get a sense for the underlying internals. And I think the picture is fairly mixed still. The intermediate trend is fine, right? The percentage of stocks in the middle of the chart here above their 50-day moving average is above 60. All right, that's a sign that a healthy majority of stocks are in intermediate term uptrends, right? Bigger picture though, longer term trend, the percentage of stocks above their 200-day moving average is still below the 50% mark. That would signal a majority of those names are in long-term uptrends. It's something we'd like to see improve, especially if the S&P 500 does break resistance in that 3150 to 3250 zone. Drilling in even a little further, if we look at the percentage of stocks above their 20-day moving average, it's still low, reading 30% this week. Now that is up from 13% the previous week, but we still would like to see some increased breadth, if you will, from a trend perspective for some of these metrics. Taking a look at the advanced decline line at the bottom of the chart, you can see it's largely mimicked the behavior of the market itself, kind of grinding sideways since that June high earlier in June 9th or so in the market. So not a real tell there, not diverging, but also not breaking out either, which sometimes we see the advanced decline line break out through a former high ahead of the index. So we're not seeing that just yet. Something obviously we'll continue to monitor closely if we see any kinds of divergences or confirmations within these indicators. So breadth certainly improved on the week. There's no two ways about it. Market's higher 3 days in a row, so you would expect to see that, but still very much a mixed picture from a breadth perspective. And in my note today, we look at a lot of other breadth indicators for the U.S. and abroad. So take a look at that if you are receiving my note. One of the areas of the market that we're paying attention to is, we've been on the growth theme for a while, right? We've talked about it. But I feel like mid caps are often left out of the conversation, right? People always talk about large caps and mega caps and or small caps, right? And then there's this whole group of stocks in between that don't get much attention, don't get much love, if you will. So the iShares Russell Mid-Cap Growth ETF, ticker symbol is IWP. The fund does have a bullish ETF power gauge rating here at Chaikin Analytics. And what we can see is that we are consolidating, right, within this kind of this pennant, if you will, just below the February highs. 50-day moving average recently crossing above the 200-day moving average. CCI 13 moving higher from an oversold position. But look at the relative strength. IWP relative to the SPY in a nice steady uptrend since those March lows and very close to going out at a new high. So when we talk about where is the relative strength in the market, we've talked about growth and just drilling down a little bit further, right? Last week, I talked about small cap growth being one of the areas to look at within small cap, right? We've obviously talked about the mega cap names quite a bit. We all know FanMag, and we've been highlighting that for some time now. But the mid caps, this group in between, I think warrants some attention as well. So you can drill down on the holdings of IWP and look for some names there that might be compelling for your process. And then finally, just thinking a little bit more thematically, going forward, I think mobile payments is a really interesting theme in the marketplace, especially on the heels of COVID-19. iPay, the ETF MG Prime Mobile Payments ETF, very similar here, consolidating just below the highs, 50-day about to cross the 200-day as the fund trades above support at the $46 level, rounding out of an oversold condition. Would like to see a little bit better relative strength here, but in fairness, trading close to those relative highs. So that's going to wrap us up for today. Have a great holiday weekend. I'll be back on Monday.
Hey, Grayson Rhodes here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.